I'm going to discuss one of the things that I'm worried about in the market short term, very, very short term, something that I've called in the past that happened to come to fruition. Okay, and many of you, if you've been following me for a while, you'll know that I've been calling these market dips. I expect another one. Okay, moving on, we also have the US dollar. I have a scary chart to show you, and it probably is not going to scare you, especially if you're in Bitcoin, but if you're not in Bitcoin, darn right you should be scared. Moving on to half of Americans planning to work past retirement age because they need more money. Why is that? Because inflation. Let's go over to Peter St. Ong. He says, the new middle class retirement plan is work till you're 75. New study finds that middle class workers plan to keep on working past 65. And on top of that, meanwhile, half of already existing retired workers are considering to go back to work because they need the money. This is not going to get any better, guys. This hasn't been getting any better since I was born. Some people think that, oh, just because November, you're going to get another freaking politician in office, you think that's going to fix your problems? You don't know history if you think that. Moving on, we have JP Morgan Chase, CEO Jamie Dimon says that the Fed will cut rates by 25 to 50 basis points tomorrow. Well, Elizabeth Warren says that the Fed should cut 75 basis points because it's necessary to prevent an economic crisis. I think we're in an economic crisis right now, considering that the interest rates on the US debt is now exceeded military expenditures. That's not going to change either, guys. And $35 trillion in debt. Every 100 days you add, US has $1 trillion to its debt. And that's not going away either. I'm gonna keep saying what's not going away after November, okay? Just because nobody seems to understand that, or at least very few people in this space seem to actually understand that. Okay, also, 84% of experts say that the Fed is going to cut rates by 25 or 0.25 basis points. Okay, so, and also BlackRock says the Federal Reserve's interest rate cuts will not be as deep as the market expects. If you've been following me on Twitter at Sir Crypto Tips, you will know that I just knocked down all these stupid arguments about the Federal Reserve FOMC meeting, saying that interest rates are going to really affect the broader market. It's not going to affect the market at all. Nada, zilch, okay? We are in a bull market, guys. We are going to $100,000 plus in the near term, regardless of whether they raise rates, they keep rates flat, or they smash rates to the ground. It does not matter. Why is that? Why? I keep saying it over and over again, because the Federal Reserve is going to print so much currency, it's going to make people's heads spin and make them very, very poor. So what happens? You dilute the currency and everything else gets expensive. It's basic economics, which blows my mind that people are so worried about a stupid rate cut. Get over it, okay? Moving on, we have Gert Van Lagen. He's a really good guy to follow on Twitter. He says the DXY, the dollar index, 1 week appears poised to continue its bearish trajectory after failing to break the December 2023 low for 2 consecutive weeks. The index is about to break the neckline of the big double top targeting sub 95. Look at this chart right now, see for yourself. The dollar is going down, and which should be exciting if you are, involved with Bitcoin or crypto. For people that have a 9-to-5 job or are trying to save up through retirement, they're going to struggle big time if they don't have anything that's an inflation hedge, like a house, Bitcoin, whatever, gold, silver, whatever. Okay, moving on. Here's the chart that I'm worried about. Short term, just as short term, I'm talking like a month maybe, okay? Now, here's a chart of open interest. That blue circle I just shared with you down below, that lower chart, that shows the amount of open interest in this space. And I look at this to determine whether or not we are going to have a big, nice dip. And last time I saw when we reached around $66,000, everybody and their mother was bullish in this space. There were a couple people. There's a couple people that were on my side to say, no, 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 no. We are going back to the low 50s, mid to low 50s. That's what I said, and boom, I put in my order. If you want to check us out for our trade alerts, our market updates, and you want to see what we have been buying, what we are going to be selling, check out learningcrypto.com, and you will know that we had put in that buy order at $55,000. It hit, and we are back way above that. It's kind of nice, but I do expect a nice big dip. Just smash some of these longs, flush them out of the system. We don't need them here. They're gamblers. Don't feel bad for them. I don't feel bad for them. And so we're going to flush, in my opinion, down to hopefully the low $50,000. Even if we go into the high $40,000 range, I would not complain one bit. And I did set up some orders for this. Check us out, learningcrypto.com, if you want to see what those orders were. And I'm not just hating on the longs here either. I'm also hating on the shorts as well. Why people short during a bull market, I don't understand. Okay, I get kind of why you want to go long, you want to bet long, but just not these crazy leverage positions like 15x, 20x, 100x. Yes, people actually do this. I think it's psychotic. If you want to sleep at night like Heidi and I do, we sleep great because we don't have any leverage. We buy spot, hold. We buy during the bear markets and we sell during the bull markets. It's as simple as that. Anyways, that's all I have. Like and subscribe. Let me know what you think down below of where we're heading short term, because we know where we're heading long term. Bye-bye.